Ever feel like you're drowning in spreadsheets, desperately trying to keep track of every sale, purchase, and expense? What if there was a better way? A central hub where all your business activities seamlessly come together? Well, you're in the right place. Today, we're diving into the heart of NetSuite, the powerful cloud-based business management suite that can transform the way you handle your financial operations. Specifically, we're going to explore the essential process of creating transactions within NetSuite. Think of transactions as the lifeblood of your business. They represent every interaction that has a financial impact, from selling a product to paying a vendor. Mastering how to create these transactions efficiently and accurately is crucial for maintaining a clear understanding of your company's financial health, making informed decisions, and ultimately driving growth. Now, NetSuite is a comprehensive system, and it might seem a little daunting at first glance. But trust me, once you get the hang of it, you'll wonder how you ever manage without it. We'll break down the process step by step, focusing on some of the most common transaction types you'll encounter. Let's start with the bread and butter of many businesses, sales orders. Imagine a customer wants to purchase your amazing products or services. The first step in NetSuite is often creating a sales order. This document records the details of the customer's request, including the items they want, the quantities, agreed upon prices, and any applicable discounts or shipping information. To create a sales order, you'll typically navigate to the Transactions menu, then hover over Sales and select Enter Sales Order. This will open a new sales order form. Here, you'll need to select your customer. NetSuite's intelligent system will allow you to search for existing customers or create a new one if this is their first purchase. Once the customer is selected, you'll start adding the items they want to buy. You can search for items by name, number, or description. As you add items, NetSuite will automatically pull in the default sales price, but you can adjust this if necessary. You'll also specify the quantity the customer wants. NetSuite will then calculate the subtotal, any applicable taxes, and the final amount due. You can also specify other important details on the sales order, such as the sales representative responsible for the order, the shipping address, billing address, and any specific terms or conditions. Once you've reviewed all the information and everything looks correct, you'll save the sales order. This creates a record of the customer's intent to purchase and often triggers the next steps in your fulfillment process, such as picking, packing, and shipping the order. Next up, let's talk about purchase orders. Just as you sell to customers, you also buy from vendors to acquire the goods or services you need to run your business. A purchase order is a document you create to formally request these items from your suppliers. To create a purchase order, you'll typically go to Transactions, then hover over Purchases, and select Enter Purchase Order. Similar to the sales order, you'll first need to select your vendor. Again, you can search for existing vendors or add a new one. Once the vendor is selected, you'll start adding the items you want to purchase. You'll specify the quantity you need and the price you've agreed upon with the vendor. NetSuite will calculate the subtotal and any estimated taxes or shipping costs. Just like with sales orders, you can include important details such as the shipping address for the goods, the billing address for the invoice, and any specific terms or conditions of the purchase. After reviewing all the information, saving the purchase order formally communicates your needs to the vendor and serves as a record for your accounting purposes. Now let's move on to expense reports. These are crucial for tracking and reimbursing employees for business-related expenses they've incurred, such as travel, meals, or supplies. To create an expense report, you'll usually navigate to Transactions, then hover over Expenses and select Enter Expense Report. The form will typically pre-populate with the employee's name. The employee will then enter each expense item individually, specifying the date the expense was incurred, the category of the expense, e.g., meals, lodging, transportation, a brief description, and the amount. Often, employees can also attach receipts as supporting documentation. Once the expense report is submitted, it usually goes through an approval workflow. Managers can review the expenses and either approve or reject them. Once approved, the expenses can be processed for payment to the employee. This ensures accurate tracking of employee spending and facilitates timely reimbursements. Finally, let's touch upon vendor bills. When you receive an invoice from a vendor for goods or services you've purchased, you'll enter this information into NetSuite as a vendor bill. This creates a record of what you owe to your suppliers. To create a vendor bill, you'll typically go to Transactions, then hover over Payables, and select Enter Bills. You'll select the vendor from whom you receive the invoice and then enter the details from the vendor's invoice, such as the invoice number, the date of the invoice, and the payment terms. You'll then add the items or services you were billed for, along with the quantities and prices. NetSuite will calculate the total amount due. Entering vendor bills accurately is essential for managing your accounts payable, tracking your outstanding obligations, and ensuring timely payments to your vendors. These are just a few of the many types of transactions you can create in NetSuite. You'll also encounter other transaction types like invoices, which are created from sales orders to bill customers, payments, both customer payments received and vendor payments made, journal entries used for non-standard accounting adjustments, and more. The beauty of NetSuite is that these transactions are all interconnected. For example, once a sales order is created, it can be easily converted into an invoice. When a vendor bill is entered, it creates a liability that needs to be paid. This interconnectedness provides a real-time view of your business's financial position. With that said, thanks for watching, and until next time.